Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for August 27th, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky business, so please don't trade any real money until you have established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to tune in to tomorrow's video to stay updated. Well, we continue to see very little reaction to any major news announcement. Price continues to consolidate against most of the majors. I think it's also important to note that the last 2 weeks of August are going to be very slow, as we talked about over the last few days, until beginning of September. At that time, we'll also see non-farm payrolls released for August, and hopefully that will spur a market reaction either to the upside or the downside against the major pairs. We do continue to see better than expected economic data out of the G7. One thing we have to ask ourselves is if this better data is dependent on the stimulus packages that the governments have been providing to their economies, and whether or not there's going to be a natural progression, organic progression in the improvement of the economic data, whether it be new home sales, existing home sales, any inflationary data that may show signs that the Fed may start increasing interest rates. But at this point, I believe it's too early to tell if any of the better than expected economic data is really based on anything other than the stimulus packages that have been passed. So if that's not the case, then perhaps we'll progress into a period of stagflation, as some economists had predicted over about 6 months ago. So at this point, we're going to continue to stick to our ranges, specifically here now looking at the euro dollar on the daily. Once again, had a pretty good bounce off the 142 level yesterday, now trading at 142.44. First level of resistance is still going to be that 142.50 area. We'll see if it's if we close higher than 142.50 today, perhaps it'll become an area of support for the euro. At the same time, we're looking at the second level of resistance at 143.72, and the next level of resistance comes at 144.50. Above that, there's really nothing here. We haven't seen anything above 144.50 in a very, very long time. Going back to December is when we had the very long wick up to the 147 level. So not much room above the 144.50. If we break that level, I expect to see a run higher. Our first level of support is going to be at 142, followed by 141.60. Below 141.60, we're going to target 140.80, 140.50, and 140 even as the last levels of support for the euro. Let's take a look at the pound dollar, currently trading at 162.30. There's been some deterioration in the pound over the last week or so. We can see the pound breaking down. If we take a look at the euro's been mainly stronger than the pound, but it hasn't broken down as much. As you can see, the pound continues to set lower lows, and we could see this momentum progress into September. But still too early to tell. If we zoom out, we can see that this is just some sort of a range here with the 160 area being tested. So we have to see if this same scenario plays out, how 160.33 plays as a level of support for the pound. So let's cover the ranges. One second, let me get the graph back going. Okay, so currently trading at 162.26. First level is going to be at the 162 even. That's the first level of support for the pound. Below 162, we're going to make this note here that yesterday's low at 161.60 is going to be our next level of support. Below that is a 160.33. We don't have anything below 160.33 because we haven't seen anything below 160.33 over the last month. The closest thing we have here is this low set in July, followed by this pivot low at the 158 level. So we're going to consider below this 160 level, 160.33, 159.80, and 158 even as levels of support. First level of resistance is going to be found at this pivot low at 162.75, followed by 163.35. Above 163.35, we expect a 164.25 as the next level of resistance, followed by 165.40 and 166.25. I'm a bit curious as to what may happen with the pound and the euro. Once again, I'm more curious as far as why this deterioration is currently happening so late in August, specifically against the pound, not as much as we've seen against the euro. So I think this could be either a leading indicator, perhaps the euro pound cross. We're going to be taking a look at that over the next few days. Even though we don't cover that cross, we will take a look at it just to see if it guides us to either the pound dollar or the euro dollar trade. Let's take a look at the US dollar versus the yen, currently trading at 94.21. We're seeing a lot of price consolidation at this time, specifically between the 93.40 level and this pivot high at the 93.30 level. Not quite sure what's going to happen. Equities haven't been able to stage a strong rally above the 9,500 level now that we've broken that. Every time we test 9,550, 9,600 over the last 3 days, the market has given up all their gains. Today specifically closing even lower. So bearish sign for the equities. So we expect further deterioration in the dollar yen as well, perhaps a break of the 93.40, targeting downside to the 92.40. So at this point, currently trading at 94.22, our first level of support for the dollar is at 93.80, followed by 93.40, 92.85, and 92.40. If you can recall, these two levels we keep talking about being the closing level of these candles early July. So there's quite a bit of support there for the dollar. Below that, we're going to see these wicks target at 91.80 level. First area of resistance is going to be found at 94.80, followed by 95.21. Above 95.21, we're going to see 96, 96.50, 97 even as levels of resistance. Let's go and take a look at the dollar Swissy as our last currency pair. Currently trading at 106.83. Dollar Swissy, dollar staging quite nice recovery against the Swissy here. We didn't like the 105.50 not being able to be broken over the last 3 days. So we actually had a trade in our member section that we talked about that we actually exited yesterday only because we didn't like a short side. So good thing we did that. As far as the long is concerned, currently trading at 106.82. We're going to be looking at 107 as first level of resistance for the dollar, followed by 107.40, 108, 108.30, and then 108.80 above that. First level of support for the dollar is going to be found at 106.27, followed by 105.50. Below 105.50, we really don't have anything meaningful other than the 104.77, 104.11, and 103.64. But those were wicks that we had seen late December. These are all wicks. I know you can't see the candles, but these are gigantically long wicks. I don't even know if that's a word, but these are very, very long wicks. More than 2 pips, more than 200 pips just on the wicks. So I don't know how meaningful these support levels are going to be for the dollar, but 105.50 is clearly the next level to major level of support for the dollar. So a break below the 105.50 level, any of these levels may or may not hold. So we'll just have to be very careful if we break below the 105.50 level. If you'd like more detailed analysis with our potential trade opportunities, join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for August 27th, 2009. And until tomorrow, everybody, good luck trading.